Hey guys, and welcome to the Working Money channel. Michael Branch here on Twitter posting this. Okay, so in and amongst what's happening right now in the United States with Silvergate Bank, SVB, and Signature Bank, we've got banks stepping up in other parts of the world, namely Santander, HSBC, Deutsche Bank, Bank Prov, Bridge Bank, Mercury Maltese, and Ceres Financial. They're among banks still reportedly willing to work with crypto firms. Now, I don't know if it's just because they did not get the memo, but there is a big change, a big sea change now happening in the industry where it's only going to be the big banks, or at least governments want only big banks to be participating in crypto trading and essentially crypto adoption. So high-profile failures of Silicon Valley Bank, Silvergate, and Signature have left something of a void for crypto firms needing banking partners. But certain banks remain open for business. So Santander, HSBC, Deutsche Bank, I already named the list. The list is based on messages obtained by CoinDesk, exchanged between staff at the outlet's parent company Digital Currency Group, who had been discussing the pursuit of new banking partners for portfolio companies. DGC also contacted BlackRock, JP Morgan, and Bank of America, as well as international banks Revolut, United Overseas Bank, and Bank Leumi, according to CoinDesk. So again, don't know if they just did not get the memo or if this is part of the narrative. I know HSBC, Deutsche Bank, for example, fairly large banks, so they will likely be part of the crypto solution moving forward. It's really just getting the small banks out. This morning I did a video highlighting Barney Frank's opinion on the Signature closure. I did not realize he was a board member, but he came out, talked about it, basically said it was a political move. So we delved into that this morning. I will link that video up here in the top right-hand corner if you guys are interested. Bank XRP here also posting this with regards to Bank of London. So we're seeing the bigger players now swarming. Bank of London submits proposal for SVB's UK arm. And because these smaller banks are closing down, now we're seeing larger banks like the Bank of London in the UK rushing in. So Bank of London has tabled an offer to Silicon Valley Bank UK, their SVB subsidiary. The company said on Sunday, adding that it has sent proposals to British authorities, including the Treasury and the Bank of England. Bank of London, a clearing bank, is leading a consortium of investors, including private equity funds, which has submitted what it described as formal proposals. Silicon Valley Bank cannot be allowed to fail, given the vital community it serves, Bank of London co-founder and CEO Anthony Watson said in a statement. This is a unique opportunity to ensure the UK has a more diversified banking sector, whilst allowing continuity of service to SVB's UK client base. Unlike other financial institutions, Bank of London does not lend and holds all of its deposits with the Bank of England. Oh, and look who's connected to this. Advisory firm Rothschild and Company is exploring options for the subsidiary as insolvency looms. Two people familiar with the discussions told Reuters on Saturday. So the Rothschild firm looking to step in and take over this crypto-related bank, closely crypto-related bank, SVB Bank, after their closure. This might also be a good time to remind you guys, the Edmund D. Rothschild Fund, this statement from back in March of 2018. I know some of you guys already remember this. If you skip down here a few pages, you see some of their key contributors. And down here, SBI Holdings. The underlying equity rallied over 60% during the period as the company was caught up in the optimism surrounding cryptocurrencies. SBI owns an 8.7% stake in Ripple's XRP. So again, guys, the Rothschilds know about XRP. Obviously, if this is going to be a cryptocurrency that moves all the money, that moves value, they are certainly going to be in the know. And so I'm not surprised that the Rothschild advisory firm is also exploring options for the subsidiary, looking to take a piece of the SVB cake. Things that make you go, or are they making you go, anymore? All this does seem like a pre-planned attack on cryptocurrency and the crypto sector. Caitlin Long also here, talking about this. Wow, the Fed admits its supervisory error in press release, but Michael Barr, said this while SVB's bank run was in full swing. She goes on to say, VC Barr, still think Custodia Bank's 100% cash model is unsafe and unsound. Aren't you curious how we knew and warned of bank run problems in advance? Care to meet? Finally. So a statement here from the Board of Governors of the Federal Reserve System. The banks we regulate, in contrast, are well protected from bank runs through a robust array of supervisory requirements, guys. Again, this is from Michael Barr. He oversees the Federal Reserve, and need I remind you, He was once on the board at Ripple. We've got more information concerning Michael Barr moving forward, which is, as a matter of fact, raising some more questions. Caitlin Long, continuing down here, link to the Fed press release is below. We need to have humility and conduct a careful and thorough review on how we supervised and regulated this firm and what we should learn from this experience, said Vice Chair Barr. So that's an admission of error, says Caitlin Long. Vice Chair Barr, she asks, and during your keynote with Chris Brummer at DC FinTech Week in October, you mentioned how few people foresaw the LDI blow-up in the UK bond market last fall. Well, guess what? I did, because it was obvious if you knew where to look. Same goes for the recent bank runs. Do you want to meet? So Caitlin Long continuing to ask for a meeting with Michael Barr. Lynn Alden here on Twitter also brought up an interesting point, and again, this serves as the context. Years ago, the narrow bank tried to do a business model of just taking deposits and holding 100% of them in reserves at the Fed. So listen to this because this is interesting. It would basically be the safest bank if allowed to exist because they have not been granted a Fed account. They even went to court over it. So this is a bank that essentially said, we'll take your deposits and we're not going to loan out that money. We're just going to keep 100% in reserves. Okay. If one bank is too safe, so this would be the safest possible bank, all right, because you know that they're not doing anything risky with your money. If one bank is too safe, it can suck deposits out of the whole system towards that bank. Most of the current two-tier banking system wouldn't make sense if that full reserve bank does exist. So regulators, ironically, want banks to be safe, but for none to be too safe. So you following me here? Let's continue down here. Banks got tons of new deposits in 2020 and 2021 from the stimulus that went out, and they had to invest them somewhere. Mostly they went into assets with little to no credit risk, but that had duration risk, treasuries and mortgages, etc. And then the Fed sucked the liquidity out. Scott down here responding just like Custodia, and then tagged Caitlin Long in this tweet. And Lynn Alden said, yep, Caitlin Long's Custodia Bank wanted to hold 108% of deposits at the Fed, and they were like, nah, can't have that. So you see how the system is rigged. Can't have the banks being too safe either. There's a sweet spot in between there, something they know they can control. So guys, I mean, this game is rigged. Ian Binns here posting this, and more to this point, Edward Griffin, American essayist and director, author of the book The Creature from Jekyll Island, described what the Fed is, the Federal Reserve, then he reveals the secret behind the Fed and why it has so much power.
Well, you asked the question in your book, The Creature from Jekyll Island, what is the Federal Reserve, and what is your answer?
Well, what it is, it's a cartel. It's not a government agency. It has the appearance of it being a government agency, and they went to great lengths to give it that facade. It does have the power of government because Congress voted to give the power of enforcement to it. But in its essence, underneath it, it's a cartel. It's nothing different than a banana cartel or an oil cartel or sugar cartel. It happens to be a banking cartel. They got together, they drew up the rules and regulations for their own industry, to self-regulate their own industry is what cartels do, and then they sent it to Congress, and they took off the label at the top that said banking cartel, and they erased that, and they said Federal Reserve Act. Congress passed it into law, and that's why we think it's a government agency, is because if you don't obey the rules that they set down for their own industry, you go to prison. And so it looks like a government agency. But basically the answer to your question is, it's a banking cartel.
I love how this guy presents his information. So straightforward and matter of fact. I would have loved to have a teacher like this in school. So, the Fed, a cartel. This is making a lot of this stuff make a lot more sense to me. Let's keep moving, guys, because Mr. Hubert posted this with regards to Michael Barr. Now, let's not forget, he was on the board. He was on the board of Ripple. Former Treasury official Michael Barr joins Ripple Labs. That happened back in 2015. So, I mean, that could only mean good things for Ripple and XRP moving forward. But it's got me thinking about some other points here in the wake of, what we've been seeing with the banks. I keep hearing that Michael Barr was behind Operation Choke Point. Now, again, if you guys didn't catch this morning's video, I do suggest you watch it. It all kind of ties together. At the same time, I hear that the timing of the end of the Ripple lawsuit couldn't be stranger. And others say that this is all planned. I don't know what to believe anymore. Too many coincidences are piling up. Now, When we look up Michael Barr here, and Mr. Hubert just brought up a screen grab. I think this is just a general Google search here. Speech by Vice Chair for Supervision Barr on crypto. He talks about calls for stablecoin regulation, Federal Reserve setting up new squad for crypto specialists. A lot of this stuff is crypto related, even though he is the overseer of the Federal Reserve. So the Federal Reserve deals with all kinds of stuff. Nevertheless, all that is very crypto-centric. Even if I go here and do my own Google search for Michael Barr, and then if I click on news here, you guys can see Fed Vice Chair for Supervision Michael Barr announces to review Silicon Valley Bank's failure. So this is the latest that is going on right now. And then we get into all the cryptocurrency related topics. Supervision on crypto, calls for stablecoin regulation, Federal Reserve setting up new squad for crypto specialists, analysts, U.S. bank regulators may take a wait and see approach. So it's looking like he is going hard on crypto, supporting stablecoin regulation, supervising cryptocurrency in the United States. And we were getting that same kind of thing here. Also, this former Ripple advisor, Michael Barr, will supervise the Federal Reserve. So he did just join last year in July of 2022. And then what is this one? Oh yeah, okay, this is another video here from Coin Bureau. The war on crypto Operation Checkpoint 2.0 has begun. And Coin Bureau here also does highlight Michael Barr. Incidentally, this would explain the irrational hatred of Ripple that I could never really understand, says Mr. Hubert. Maybe Ripple is playing exactly the same game as Ethereum, just more professionally. So, now what I think he's surmising is Michael Barr an inside man to corral crypto in a way that needs to be corralled in order to have and maintain that control. Then once everything is tokenized, once everything is on the blockchain, well, will we finally get a verdict from the Ripple SEC case? Will XRP be finally unleashed onto the United States and into the economy? And will we have that liquidity to serve for this new financial system that we're slowly getting through at this moment in time? So Nick Carter also commented on this. When I warned about Operation Checkpoint a month ago and didn't think in a million years that it would go 100 times further and actually take down the top 3 crypto-facing banks, it is breathtaking. And this wasn't an accident. It was a demolition. So we've talked about this, a controlled demolition from the beginning. Nick Carter continues down here. At the same time, this article was perceived as inflammatory and excessively fear-mongering. Little did we know. So a few months ago, we talked about Operation Checkpoint 2.0 and how that was underway. Arthur Hayes commenting here, though, I love you, buddy, but I'm going to have to call shenanigans on your theory. The Fed is buying low-price bonds at par and just admitted the entire United States banking sector has an asset/liability mismatch, and it's 100% due to easy then tight monetary policy. Powell does not want this. Nick Carter responding here, Powell doesn't, but progressives like Warren are dumb enough to pursue petty grievances by kneecapping crypto-adjacent banks. There's enough smoking guns here. So again, Operation Checkpoint, the connection with the Biden administration, Michael Barr, formerly at Ripple. And then we've got this crypto cowboy, holy moly, Board of Governors of the Federal Reserve System. And this just in as well as of yesterday. Federal Reserve Board announces that Vice Chair of Supervision Michael Barr is leading a review of the supervision and regulation of Silicon Valley Bank in light of its failure. All right, and this review will be publicly released on May the 1st. The events surrounding Silicon Valley Bank demand a thorough, transparent, and swift review by the Federal Reserve, said Chair Jerome Powell. We need to have humility and conduct a careful and thorough review of how we supervise and regulated this firm and what we should learn from this experience. This coming from Vice Chair Michael Barr. So are we witnessing, guys, the dominoes fall exactly where they need to be falling? Michael Barr, the connection to the Federal Reserve. Just so happens these banks are collapsing, and now we're getting a statement suggesting that there's going to be a review, basically giving them a reason to review regulation of banks like Silicon Valley Bank in light of its failure. And again, guys, in the video this morning, Barney Frank saying, the takedown of Signature Bank was basically a political decision and that, that bank was not necessarily insolvent. We've also got the connection of Michael Barr here. And I mean, the icing on the cake for us, Michael Barr was on the board at Ripple. So, I mean, as to Mr. Hubert's point here, the point he made down here, maybe Ripple is playing the exact game as Ethereum, just more professionally because they are in on it. And this could be, in fact, pre-planned from the beginning. The new financial system is, in fact, going to include Ripple and XRP. We got the next step in the process here, including Michael Barr coming out with the statements that he has said. Also, Ashish Burla, my quote in Reuters this morning, government did the right thing. WRT to SVB depositors. Corporate treasurers are going to be a sought-after role for tech firms. Big banks are winners here. So Ashish Birla echoing the same statement. The big banks are going to be the winners because these smaller banks are going to be forced to fold. So they mention tech investor, but they don't mention that that he works for Ripple up here. Companies should never have to worry about whether or not their deposits are safe, he said. And then, so this was taken again from Reuters News. Birla predicts that in the next few days, startups will rush en masse to open accounts at large banks. And guys, that is already happening, as I'd mentioned near the top of this video here, because bigger banks like in the UK, the Bank of London has already submitted proposals to scoop up SVB's business. And we have customers moving to larger banks and companies that hold considerable cash positions. He thinks that there will be a surge of interest in hiring treasurers who will work to minimize the amount of cash companies are holding at any moment. So a brand new shift, guys. I'm seeing it happening before my eyes. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.